Good day, guys. As a mentor, Nasdaq Ninja. Guys, before we can continue with this session, can you please, guys, like, subscribe. Once you're done with this video, you can share to your family and friends so that they can benefit from what you have benefit for free as well. So today we're gonna update about US30, NAS100, and gold. So actually, it's a weekly update. We're not saying it's what's gonna happen. It's what we think it's gonna happen based on our analysis. So we're gonna analyze together. Remember last time I told you guys about the structure. So first thing first, remember we get the structure. I always tell you that I prefer using H4. I don't care if I can unzoom the chart to the 0%, but at least if I can see the whole structure of the market from the H4, then I feel confident with every trade that I'm gonna take. Okay guys, like I always say, the first thing first that you have to look at for before you analyze the chart, you need to first identify your highest point, then you identify your lowest point. So I always identify my lowest point where the trend starts. Remember, there is what I call current lowest point and the lowest point where the trend starts. So the reason I always create the current lowest point, what you can realize from Nasdaq, if Nasdaq creates a current lowest point, it will never go to the previous lowest point. Like as we can check here, this was our current lowest point from this highest point. It didn't come back here. This is actually our lowest point. You understand? So first thing first, I'm going to identify my highest point, and then this is my lowest point here. But I won't forget my current lowest point because this one is the most important one. So from this position here, I create a trend, a diagonal support to the top. So it's nice when the market have already respected because everything, it seems simple. If I were to ask you, did you know that there were a third touch here? You didn't know. This is how you were gonna enter your buys. It's either you were gonna use the support or you were gonna use the diagonal support. So remember, I use both support and resistance, and I use diagonal support and diagonal resistance. I feel like they use the same rules. So here you're gonna create a diagonal resistance going to the top. So as much as we can see, the diagonal resistance has two touches. So it's either we're gonna reverse here or we're gonna reverse here. But this is Nasdaq. I feel like we're gonna reverse at the diagonal resistance. So this is our first touch here. This is our second touch. So I got a lot of people on my DM saying that I should teach them the third touch rule. So the third touch rule is simple. It's so simple when it comes to the diagonal support. So when the market touches here and then touches here again, it gives us a 90% rule of a reversal here. So you see it touched, and then the next thing you have your own sniper entry holding it to the top. So always you can aim for that. We have different traders. We have traders with trade diagonal support. We have traders that trade correction. We have traders that trade breakout. We have traders that trade retest. But I trade everything because as much as you can hear, I know the difference. So it means the things that I'm talking about, they are working. I use them all. So I will prefer you guys to use them all. Don't be a choosy trader because sometimes when you choose, you end up using one thing. What if that thing is no longer working? You understand? So now we have our structure. We identifying the points. There's our point, third touch, and then there's our other point here, and then this is our point again here. So as much as we said, we don't have a third touch there. So now we're gonna reset the chart and create what we call trend inside a trend. So sometimes if you can't really identify a trend very well, you need to just go and get a wave so that you can actually draw a beautiful trend and then go back to your indicators, I mean your candlestick, so that you can see is your trend well set or it's not. So I'm gonna do this, and then I'm gonna create a trend here. So remember the touches matters. So I'm gonna start it here. and then I'm going to take it here from the bottom to the top. So, and then I'm going to take the trends back. So what I don't like about the waves is that they don't create the rejections. You see where the market rejected, but the wave didn't even bother to go to the rejection. So they don't actually go to the rejection. They start where the candlestick they don't go with the rejection actually. So that's what I don't like about them, because of fact that the market wanna reverse on the rejection, not on the candlestick. But if you don't get a proper trend, just use a wave, because there's no way you're gonna get a proper trend. And then once you don't get a proper trend, that's when you're gonna blow account, because you'll be drawing a trend that it's not there, and then you feel like the market will respect, and then the market doesn't respect. So since we currently here, we can't be drawing trends which were here. This was a beautiful correction which went up. It was an impulse correction. Impulse went up. It was a beautiful one. If you didn't catch this double bottom here, you were supposed to catch the market here. But if you didn't catch the market anywhere there, you didn't lose. Don't think like the market have left you. Always come up with your beautiful setup so that you can keep the market on the way. So here I'm going to create a beautiful support. So I feel like we actually experiencing another correction here. So I feel like this will be our impulse, then here become our correction. Then the next thing we're going to push to the top to touch the resistance here. Let me go back to a higher screen so that you can see very well. So I feel like once we touch here, we need to push to the top. So as much as I have drawn a lot of things on a H4 time frame, let me go to H1. So this is actually our horizontal correction. So our confirmation for this thing, we can say once the market break this position here, let's put it here. Once the market break this position here and then comes at the top, that's when you're gonna be expecting what? Expecting more buying opportunities. But even where the market is now, you can prepare taking your buying opportunities, expecting them to push to the top from this position here. So on the Monday when the market opens, you can give it 2 hours, then take your proper buys opportunities. So we push into the top. I feel like this is just a correction because we had an impulse move. Then here we just on a correction. Then we're gonna be pushing to the top, having another impulse move. So this is all about Nasdaq, not much about Nasdaq. So now we're gonna go to US30. So now we're on US30. So remember guys, first thing first, you need to go to your H4 time frame. Like I always say, I only use H4 time frame. From H4 time frame, then I go downwards from my indices. So the reason of me using H4 is because I can execute a trade using H4. I can't execute a trade using a daily time frame. So first thing first, you need to identify your highest point here. So guys, before you can identify our highest point here, can we just please identify our previous highest point, and then we identify our current lowest point. I'm gonna tell you why I'm doing that. And then here I'm gonna create my diagonal resistance. You can see that it doesn't have the third touch. It means yesterday can be looking for bullish opportunities next week. And then I'm gonna create my diagonal support here. So as much as you can see, I have my diagonal resistance and my diagonal support. I have my highest point and my lowest point. So that one is the previous highest point. Understand? We have the current one, but I can't say it's the strongest and I can't say it's the major. Always the market creates the weekly highest point which it can break. So now we're gonna zoom in the chart. So from zooming in the chart, we're going to create what we created last week, which was trend inside a trend from this position here, going to this position there. As much as you can see, it broke and then it retested. Like I said, once we break the trend inside a trend, other things becomes useless. We're just going to break, because that's the only way we can see that we have a high momentum going to the top. So we're going to create the trend again here. So if you're gonna check the previous video, you're gonna see that we gave you guys this direction from this point here, check where it is, and we told you guys that we're gonna create new highs. We just created our new highs here. So we're not gonna talk about the correction like we said on Nasdaq, because we already talked about this correction on the other video. So this was just a simple thing. It was an impulse move, correction, impulse. So we're gonna actually reset the chart. So after resetting, we see this. So I want you guys to not put this thing as a difficult thing. I want you guys to understand that this thing is simple and easy. So if you have a resistance and then you break the resistance and closes outside, so the resistance changes into a support. Remember, the market can play inside or outside, but at least if it doesn't close outside. But if it closes outside, it gives us a high momentum of continuation. So now we're gonna go to 60 minutes time frame. We're gonna focus most on this position here. So from this position here, we're gonna create what we call a trend. So we're gonna take a trend from this point here to the top, and then we're gonna take a trend again here to the top again. So there's our diagonal resistance. So the reason I'm making this trend, I want to have confidence on my buying opportunities. Understand? I understand that I broke a resistance and it was a major resistance, and then I even closed outside. You understand? So if I break a major resistance and I close outside, it means I'm having a major support. So for me to draw a trend here, it's for me to be confident with the buy that I'm going to be taking from this position, hoping that they're going to come here. So the only way you can take selling opportunity, remember guys, in the market, it's actually the determination. We don't give the market direction. We don't control the market. We follow what the market gives us. So if the market were to break this point here, obviously it's going to do a simple thing. Let's say it breaks here and then it pushes to the top, gonna retest here, then go to the bottom. But as much as we're playing inside the diagonal support, we expect more of the buying opportunities. We expect more for the buying opportunities. So like I always say guys, when I analyze, H1 is my most important time frame. If I can see that I can execute with my H1, I'm going to use H1 to execute a trade. So the only way I can execute a trade is when I get an engulf or pin bar or a hammer. That's when I'm going to execute a trade. So you need to get bullish confirmation of candlesticks here so that you can confirm your entry point. So my ending time frame when I analyze, it's M30. So this is my M30. So I feel like when the market opens, might push a little bit to the bottom, might come here, then come back here in the trend. Then we might be expecting our buying opportunities. As much as you can see here, we don't have our third touch, and we don't have our third touch here as well. So now we're going to gold. So now we're on gold. So first thing first, we should increase our time frame to H4 and then unzoom our chart to the lowest point where we're gonna see everything clearly. So yeah, I think it's fine now. So first thing first, when you analyze, you identify your highest point, then you go for your lowest point. Then after, you can create your diagonal resistance, and then your diagonal support. So probably here on gold, we're having a beautiful downtrend. So after you zoom in your chart, then the first thing I would like to create here on gold, it's our zone here, and then our other zone here. Then that's when I'm gonna create our bullish trend from this point here to this other point here. So I feel like the market will open. When it opens, we'll come to this position here in order for it to confirm more buying opportunities. Because if it breaks here, that's when we're gonna be looking out for selling opportunities. But before it could actually break, it has to give us our third touch. We have our first touch here, second touch here, then we can get any third touch here. Then once we get our third touch, that's when we're gonna be saying what? We're pushing to the top. We're pushing to the top. So if the only way we're gonna confirm that we're pushing to the top and then we're not gonna reverse, it's when we pass this position here. So if the market comes and then break the zone here and then come back retest here, then it will push to the top. But as much as we're still here, we'll say that the market has to touch to this position. So you can let it play out until it touches this diagonal support. Then after touching the diagonal support, that's when you're gonna execute your trade so that you can have a risk-free trade. You understand? You can let it come, touch this diagonal support, then execute. So what I like about this structure is that if you can check clearly, the market came from here, touched here, and then touched there, and then come back, touched there. So it means from this point here, we have to touch here because there's from this resistance, this support stopped this whole big movement and then created such movement. So it can't create such movement just to reverse here. It has to touch here and then push to the top. It's either the only point whereby we're gonna be reversing crazily is when we touch this point here. But as much as we're still here, I feel like we're gonna touch this point here, then the next thing we push to the top. So this is our gold update, guys. So guys, don't forget to like, subscribe, share these videos to your friends and families so that they can learn what you have learned. Thank you guys. Meet you guys on the other videos.